Hello everyone, welcome to yet another session of CREDAI National Youth Wing's Deep Dive series. Today I, Darsh, are pleased to welcome Mr. Prudhvi Chinta, co-founder and CEO of Assetmonk. Hi
Thank you,
Prudhvi.
Darsh. Hi, Darsh. Thank you. Thanks for your welcome.
So, just an introduction for Mr. Prudhvi Chinta. He's an alumni of BITS Pilani and IIM Calcutta. Over the last 14 years of his rich career, he's built various products, done some niche problem solving into deep engineering, and currently in his current role, he's a co-founder and CEO of Assetmonk, which is a platform for fractional ownership, structured investments, and he's creating some kind of a revolution in the Indian real estate space. So over to you. Nice to have you here today.
Thank you. That's a very warm welcome. Same here.
So starting off, many people, many of our audiences would like to know that fractional ownership, while is a recent, in the last few years, it has come up in a very good space. But what are the major changes which you see happening in the Indian real estate space over the last decade? What was before? What is today? What is your understanding of the space? Given that you have a rich history of building products, and now that you're into real estate space since quite some time, how do you see the industry coming up?
Thank you. That's a very good question. So, as you are aware, the real estate industry, especially in India, has seen phenomenal changes, particularly in the last decade and a half, right? Maybe we can start with, I would take the comparison between now and maybe 2010, 2012 period, where I would still say real estate is still develop, sell, buy mode of these things with relatively straightforward transactions, and a lot of unorganized play was there and non-standardized systems. Then the first major breakthrough happened somewhere around 2014. REITs were introduced for the first time in India, but it took almost 4 to 5 years for the first REIT to come out. That's a different story. Then the significant milestone that has changed the industry in building the confidence, I would say, is thanks to RERA, right? RERA has come in, understood the problems both from the buyer side and from the seller side, developer side, and try to standardize the expectations on both sides and created a sort of a framework in which people can expect what is being built, when it will be given, and what you can expect, and how it is going to shape up, and what is my fallback remedy. So this took up some time in coming up. Once it started coming in, people started understanding. Now I can start looking at this sector more seriously. Right. That's the first major breakthrough, I would say. Then immediately we have seen the economy doing fantastic. Especially the Indian economy during the last decade has grown consistently, irrespective of what happened elsewhere. Right? We've been strong growth. We've registered very strong growth numbers consistently, and we still are. It coupled with good focus on infrastructure development has made sure in the near future the economy is not going to slow down, right? After this thing, the next thing is a good amount of foreign influx of foreign funds has started coming into India, right? Good amount of large funds have started taking bets on Indian real estate, especially, which was till before a little bit doubtful. They were always sitting on the fence. Once they started coming in, picking up, and the GCCs centers have started establishing. The large multinationals started establishing phenomenal presence in across different locations in India. The commercial real estate started putting in for the funds to actually assess more and started pumping in more funds. This is all what I would say a cyclical effect. Then the sector started seeing actual professional management coming into the sector. People who actually look at it professionally, try to plan, try to budget it, and try to deliver. Once the professional managers started taking over some of these, what happens is the innovation spurted. A lot of prop tech innovations at different spaces coming in. Asset classes started proliferating. Previously for us, real estate means houses or offices, right? Maybe malls occasionally.
Yeah.
Now look at it, the definition has expanded.
Right.
You see senior living, you see co-living, you see student living, or else data centers, specific purpose-built industrial housing also.
Dark stores have come up.
Yeah.
Your warehousing has come up in a big way. Logistics has increased.
Exactly.
So, exactly right. With the kind of infrastructure development that the country has seen over the last 10 years, it has had a cyclical effect. It has had a effect through various other means that almost all asset classes in India are now getting developed. So while you said, while you gave a good insight wherein good number of investments have happened in India, many of the large investment funds across the world are starting investing in India. But mainly we see the investment has come up in the commercial real estate space. While residential real estate has always been somewhere, it's always been cash surplus wherein investors, developers have already put in their money. Right now, over the last few years, we've seen commercial real estate come up in a good way, be it offices, be it your hospitality or any other kind of a commercial real estate, apart from normal office space as well. Retail is also doing very well. There are some funds which are concentrated on retail. So, given that and given the kind of commercial real estate impact will have on the entire real estate space and eventually on the GDP of the country, what is your take on commercial real estate? Because given fractional ownership, given REITs, given SM REITs, any of these, most of them are focused on commercial real estate. So, what is your take on the growth, the analysis on the commercial real estate space in India currently?
Understood. That's again a good question. See, basically, commercial real estate is booming big time. So is residential. Just I'll conclude on the resi space also. Why? Because you have seen for the first time, which is a good trend or a bad trend, last quarter or last quarter, the number of units of affordable housing is less than the luxury housing, right? We've never imagined that way. So the mid segment is always the bulk, but previously maybe 7 8 years back it was always the affordable segment pushing up. But now the investors are so confident gungo about this sector, they wanted to put in more and more money, the retail investors. In fact, if you analyze the last 5 years stock performance of some of these real estate scripts also, they've done phenomenally well, all the real estate stocks, right?
Yeah.
That is the confidence of this thing, and most of them have exposure to residential real estate. Now, why commercial? See, basically, especially last 5 6 years is also good period. The last 4 years in particular, I would take one of the phenomenon is COVID also opened up perspectives of people, right? Previously for us, I'm talking more from a average retail investor.
Okay.
Right? For me, what is my exposure to real estate, right? First, I will. In fact, my example, I took up a house just out of B school, right? That is a mandatory checklist is done. Then the EMI is done. After you pay up, then the next logical thing is pick up one more house or a plot, a slightly risky a plot. Very rarely a few people in the circle started looking at retail spaces like a shop in a shopping complex and all these things. That's the exposure, because there was never an access, right? These malls, these large office spaces, these are the games for the big boys. That is how you used to be, right? Then the awareness started, and some of REITs was a good phenomenon when they've brought an entire bouquet of 10,000, 20,000 crores of inventory to the retail investor. Suddenly I started looking at it, analyzing, yes, I can participate in this thing. Followed up by, then the next thing is, okay, fine, this is a good box, the bouquet of things, but I want to select my own asset, because I don't know in this REIT, there is an asset in Bangalore, another asset in Mumbai, but I only know about my micro market. I only know about Navi Mumbai, nothing else. Can I select this asset? That's when commercial real estate, especially fractional ownership as a concept, picked up big time. I can divide it in pre-COVID and post-COVID. Pre-COVID, or even it was there from the last 10 years or so, 10, 15 years also, but it was always unorganized bits and pieces.
And it was restricted to niche investors who understood the space or maybe had the risk appetite for it.
Yes.
Because it was not regulated as well, what I believe is 10 years back. Maybe even REITs was still coming up. So fractional ownership at that point might have been a very new concept altogether.
Yes. The true democratization happened maybe 20, 21, 22. These are the years when it literally opened up. In India, what is the one single largest financial instrument is fixed deposits. Right.
Even today?
Even today.
Oh, wow.
Close to 1.5 lakh crores or even more is just parked there.
Okay. Oh, wow.
Right. That's the single largest thing. Then comes bonds, then comes mutual funds, then all these things starts coming in. Sorry, 170 lakh crores, not 1.5 lakh crores.
Oh,
Right,
170 lakh crores.
170 lakh
Oh,
crores.
that's almost 2 trillion.
Yeah,
$2 trillion.
FD is single largest thing.
Single largest thing.
But when people are always running, when they had a disposable time at their hands to start analyzing these things, they have a lot of disposable money in their hand during COVID.
Yeah.
Alternative investments picked up.
Right.
Right? People started analyzing, looking at things where it matters. Okay, here I'm getting 7%. I'll take the comparison of fixed deposit, which is the closest thing. The returns are comparable to commercial real estate. Right, 6 to 7% returns there.
Yeah.
Here it is 7 to 8% returns here. Both are comparable, but I'm getting monthly here.
Yeah.
On top of it, underlying asset goes up.
The capital appreciation that you can see over the years.
Yes. I want to stay put. I don't want to reinvest. This is a lifelong investment. I want to keep it something. So appreciation is also a good thing. On the appreciation, your taxation is much lesser compared to other income. Long-term capital gains. Stocks also, the next thing is even a lot of exposure went into stocks and mutual funds. But seeing the volatility, I also want to diversify. Get a little more stability into the system. That's where commercial real estate picked up.
So, yes, so commercial real estate picked up post-COVID in a very good way. And of course, previously they were there, annuity income was always there, lease income was always there. But the exposure of retail investors maybe to commercial increased. And I think so during the COVID era, with the stock market going up, people took to the listed REITs which came out during that time. People invested in good amounts. So right now they get good returns out of a REIT. And I think so REIT formula is that 90% of the income has to get distributed as dividends every year. Is that so?
That's the regulation. So basically, after all the expenses, whatever is the disposable income that is available from you, out of which minimum 90% has to be distributed. The 10% reserves can be kept.
Right. So that's why I think so around that time, fractional, at least the REITs part, many people took up to it, and real estate is considered as the best hedge against inflation as well. Traditionally, it has been. So that has come up. But right now, in the last few years, at least a year back or something, we've seen a very new concept emerge, which is SM REIT.
Yeah.
So can you put some highlight for our audience? What is exactly SM REIT? Because as a student or as a developer or as a person who wants to investor class, what do you mean by SM REIT?
So SM REIT essentially is small and medium real estate investment trust.
Okay.
So SEBI has come up with a new asset class or a newer option for retail investors to take exposure into real estate through a very structured and safe way. Right.
Okay.
So basically, during this period, last few years, when fractional ownership platforms started proliferating, few of the platforms, including us, we have some sort of a strict self-regulating mechanisms like a trustees, escrows, and stuff like that. But you can't control them. When the activity is so much, not everyone has the bandwidth or the wherewithal or the intent to keep yourself so regulated.
Okay.
So, but SEBI has seen the demand for this thing, right? And the kind of retail presence to the listed markets during these times. For example, if you see any IPO these days, some of them have hundreds of times of subscription, 300x subscription, 20x subscription, right? Even if we have seen some amount of FIs going out occasionally, the market has withstood because of the resilience showcased by the retail investors. So the investors are hungry. They want to take exposure into real estate because they have also seen volatility in the market. They want to diversify some portfolio.
Right.
That is where SEBI has come up with an extension to REIT. SM REIT is an extension to the main extension of the main board REIT, which is already present.
Okay.
A REIT started, announcement started 10 years back, but the first REIT came out 2019.
Right.
Now we have close 5 REITs in India.
5 REITs which are listed.
Yes.
Right.
But still, fractional ownership as a concept, a lot of investors in investing, the mature audiences have invested into fractional ownership. So SEBI wanted to create a vehicle or a platform to standardize this experience. That is how SM REITs as a concept has come.
What is the structure? So, I mean, when I say the structure of SM REIT, what is the minimum investments? What is the minimum eligibility? Or maybe how is the structure of SM REIT, that what is the hierarchy, or what is how the investments work? inflow, outflow, any regulation? If you can, give some insights into that for our audience.
Perfectly. So before that, one quick thing. So because
Yeah.
we'll close about SEBI, because the way the SM REIT has also happened is in a very consultative approach.
Okay.
That means they have come up with a consultation paper,
Right.
asked for industry
Right.
and all the relevant stakeholders, their comments, public comments, put up a board to analyze, and then
Right.
finally drafted it.
Right.
And then even as recently as this week, they came up with an additional consultation paper to form or standardize some of the disclosures by SM REITs.
Okay.
That is how proactive the regulator is. With such a good proactive regulator, I think this is gonna go up in a big way. And regarding the structure is similar to REIT. So what is a REIT? It's a trust essentially.
Right.
A trust which holds certain sets of bouquet. I'm talking about a REIT is basically it holds a bouquet of assets, and then it manages these assets. The retail investors buy units of a REIT,
Right.
but they don't need to buy, manage, look after or anything. They have professional managers who look after these things and then send the money back to the investors on a quarterly, half-yearly, yearly basis, depending on the disclosure cycle. That is how a REIT works. SM REIT works exactly similar.
Okay.
So basically, SM REIT, small and medium real estate investment trust. You first form a trust. A trust has a trustee who is an overseer for all these activities. He is like an independent body. A trustee has to be a registered trustee with SEBI. There are a few registered trustees with the SEBI, and apart from this, you have an investment manager. A trustee looks after is an overseer, whereas this guy is a non-playing captain. This guy is a playing captain. That investment manager is responsible for identifying assets, acquiring them, and then professionally managing them, take care of these assets, and then take care of the leases and all these things. Day-to-day operational cycle is all done by the investment manager. The entire scheme is designed in a way that it has to be run through schemes.
Okay.
Right. A REIT is nothing but it has multiple schemes working under it. Right.
Right.
A scheme is nothing but a company which is owning an asset, and you float a scheme to acquire this company and manage this company.
Understood.
A REIT can have multiple schemes, right?
Right.
I am an investor in scheme 1.
Okay.
The second investor is in the scheme 2. There won't be any intermingling between these two.
Okay.
Each scheme or each asset is ring fenced.
Right.
The accounts, the demat accounts, shareholders, everything is separate to the scheme 2 and scheme 3 and scheme 4.
So each has a different investment style, return parameters, risk parameters. Each scheme can have different parameters set for them.
So we know how the companies go to public markets, right? You go for an IPO. That's a main board IPO.
Right.
If I have to draw a comparison, basically REIT is a main board IPO.
Right.
And there is SME IPOs.
Right.
Here this is SM REITs.
Understood.
So basically each scheme, every building or an asset is going to public for subscription and to be traded in the exchanges.
So even SM REITs, if I buy into a unit of your SM REIT, I get the shares or the units in demat.
Yeah, you get.
Or is it physical?
You will get
it's all in dematerialized form.
It's all it is. In fact, even for regular shares of private companies, or also there is a ruling that you have to make it demat form now.
Okay.
So there are a few rules for forming this SM REITs.
Right. What is the minimum entry for a SM REIT? What is the minimum threshold for investors?
Yes. Okay. Firstly, let's talk about the company or the asset. What asset can go to the market?
Right.
And then how do you enter into that asset?
Yep.
Right. As far as the asset is concerned, minimum is 50 crores and maximum is 500 crores.
Okay.
So 500 crores ke baad, if it is more than 500 crores, the main REITs has the minimum criteria of 500 crores. That means it stops where the main REIT starts in terms of a criteria. 50 to 500 crores is a very good spot for small and medium developers, property owners to liquidate their assets into the market. Right. And second thing is each scheme should own this asset full and sole. It should be the sole owner of this asset. So let us say you have a 600 crore asset. Right. You cannot have two schemes owning this asset parallelly. I should have separate asset for myself sub 500. Secondly, you can do the other way, wherein if you have 3 retail showrooms, each of them of 20 crores,
Right.
club them together, it's a 60 crore asset. You can hold together all these 3 assets into one company
One
and
scheme.
go to the
Right.
market via a scheme.
So one SM REIT can have multiple schemes.
Yes.
Each scheme limit is 500 crores.
Each scheme is 500 crores.
The main company can be 5,000 crores, for example.
Yeah.
But 10 schemes, each scheme has different assets, investment styles, whatever parameters are set by the company for the investors. Each of them has a limit of 500.
Yes.
Wow.
So the main one is not a hold. It's like a holding structure, but it's
Right.
not a company. All the company level transactions are happening at the scheme level.
At the scheme level. So as
this
an
is an
investor, I
overseeing
deal
the
with the
trust.
scheme level.
Yes.
Well, the brand name or something is of the
Is a
holding
trust.
company. Is like a custodian or something.
Yes.
But in a dematerialized form, the shares that I get is of each different scheme.
Yeah.
Perfect.
So for a retail investor to be eligible to this, minimum unit size is 10 lakh rupees. Right? You can change the unit size to 10, 15, whatever it is. The minimum exposure you have to take is
To each scheme.
per unit. Minimum unit price is 10 lakh rupees.
10 lakh rupees. Okay.
So this is a fundamental differentiation between a main REIT where you can go to 10,000, 15,000, etc., where you are going to a biodiverse portfolio, whereas here you are a mature investor, sophisticated investor, you want to take a bet on this asset, minimum is 10 lakh rupees. And other rules being for each asset or scheme, any single investor should not hold more than 25% in that, and it requires a minimum of 200 investors to be part of that thing. So it all makes sure that it is all neatly diversified and it's not concentrated or controlled by a specific set of people.
So that's something interesting to know. So now when we've spoken about SM REITs, we've also spoken about REITs per se. So while we understand the difference between a REIT and a SM REIT, what is the difference between, say, SM REIT or your kind of alternative investment funds which are also there in the market today? Because some of the parameters you said, even there are some threshold limits which are much higher, of course. It's not 10 lakhs, it's much higher. Even they have some regulations which have come from SEBI and other regulatory bodies that they have to adhere to. So what are the main differences between these kind of asset classes? Because as an investor who has this kind of money as a disposable money at the side, that today I can invest 10 lakhs or 1 crore or say up to 10 crores also for HNIs out there. What is the key difference and between these structures and these investment schemes available in the market? And in what way, that can be a second question, but in what way is SM REIT more attractive today than others? If at all it is.
See, basically every instrument has its ideal audiences, I would say. So let us say someone who is much more sophisticated, understands the space, they go to AIFs where the minimum ticket size is 1 crore, minimum investment size is 1 crore.
Yes.
Right?
Yeah.
They're heavily neatly regulated, but at the same time there is a lot of relaxation in terms of their leveraging structure, whether you can borrow, how much you can borrow, or else in terms of their kind of investments that they do in real estate. It need not be completed asset. You can give a debt, you can acquire a space also into it. It's a combination of debt, equity, or a combination structures also. There is freedom in structures, there is freedom in what stage you are entering in. So that's why it is for the slightly more evolved or mature audiences who understand it. And as far as between REITs and SM REITs are concerned, see, REITs, anyone with 10-20,000 rupees also can enter. So they want to be part of a diverse portfolio where they need not assess. They don't want to assess a particular asset and then go for it. So REITs also allow you to enter into under construction assets also. 80% of the funds should be in constructed. The remaining 20% can be kept in under construction assets. Whereas in SM REITs, you're not allowed to do it. SM REITs is a neatly, tightly packaged thing. Even in the distributable dividends also. Here, REITs specify that you distribute 90%. Here it is 95%.
Right.
Whereas in the asset also, SM REITs, you should hold the asset to yourself. Whereas here you should hold majority. 51% of or above should be yours. The remaining need not be held by you. You can take leverage. There are some leverage controls also. That way, SM REITs, they want to make sure they give a neat platform for the mid segment of developers, asset owners to liquidate, and also the investors who are passionate about real estate, they know where they are entering into neat thing with a lot of tighter controls than REIT.
Understood. So, in a way, SEBI has made these norms a bit stringent because retail investors are more involved. Because of the ticket size 10 lakh, it's more of a retail investors, which are the normal middle class Indian who aspires to step up in life. They are the main investors. So, maybe that's why these harsher regulations or more stricter regulations, 95% payout should be done, assets should be wholly owned. So, it's, in a way, it's good for investors.
It's good. In fact, one fantastic thing also, they've also very specific that no related party should be involved in SM REITs.
Okay, no related
What
party
is a related
transactions.
party? Let us say in REITs, main board REITs,
Yeah.
related parties are allowed with public disclosure. Right?
Okay.
Typically, if you see some of these REITs like an Embassy or Nexus, so they first hold the assets, they are the sponsor, and they create an investment manager entity. The sponsor holds some part of the REIT, the remaining it goes to the public. Everything is managed by the investor management entity.
Right.
Because they are disclosing and they are making sure it's an arm's length transaction, this is allowed.
Right.
Whereas in SM REITs, SEBI is very categorical that if you hold an asset, you should not have any link to the investment manager.
Okay.
You are just giving an asset, you are liquidating the asset. Let the investment manager as a standalone body without any relation to you manage this, take it to the market and do that.
So,
And there is no sponsor as a concept. Sponsor and investment manager are the same.
same person.
Right?
Okay.
And investment manager ko they've also asked them to make sure they have a skin in the game. So at least you should hold 5% of the REIT units from the investment manager. If it is not leveraged and if there is a debt on the asset, then you should hold 15% of it. That too not just for 1 year or 2 years.
Throughout
For 5 years you have to hold 5%.
Okay,
For the next 5 years you should hold 3%. And you should have some portion.
So you have the skin in the game,
Yeah.
and then you're not taking the investors for a ride.
Yes.
So that's a good thing actually. Then
Yes.
such regulations are always welcomed. So what are the kind of assets or the asset classes within SM REIT that are typically targeted today?
See, now we expect the first set of assets will be office spaces. Grade A office spaces are the easiest ones because they are the
The cleaner transaction demand is more. There's a good annuity lease income and more.
you understand the tenant and all these things. So the cycle is it will start with it,
Right.
but slowly it will get into retail, and then it can get into mixed developments. May some of this logistics space in a mixed development. Logistics standalone are not, they are in the infrastructure. They are not allowed in SM REITs.
Yes.
Then if you want to be more creative, even hospitals,
Okay.
schools can also sell their asset and then become asset light. Because most of the traditional business, they hold assets.
Right.
Some of them hold land banks. They can get it developed, leverage, liquidate it, can get this thing. In fact, the data centers, large size data centers, then purpose-built specialty things like vacation homes, hotels, or else student living, senior living,
Co-living, all these concepts. So all the newer age concepts of alternative investments.
Anything that is completed
Yeah.
and rent generating. These are the only two criteria.
Right.
Let us say you build a large sized community
Right.
as a mixed development.
Yep.
So community will have a clubhouse,
Right.
but build it twice and then keep it open to outside public and then make it as a revenue generating. You can liquidate it
Right. So that is something attractive for a
a developer, right? If they want to tap public funds also.
Right. And for a fractional ownership SM REIT platform, this is something which can be a win-win situation for the developer community, the platform, and
I'm
the
a retailer. I hold
Right.
1,000 kirana shops everywhere, and then I want to. Each shop is 30 lakh rupees. Let us say a 300 crore transaction holding 1,000 of these assets. I can just put it and then liquidate it. Can be done. All these. This is flexible enough. With as long as you follow the rules, it's a very good a vehicle to use.
Understood. Wow, that's good. So, I mean, very good insights on all of this. But while SM REITs has been a newer concept over the last few years, and right now you have, as you said, this past week, white papers have also come out, consultations are happening, SEBI has been so forthcoming. There is changes happening as we even speak. What do you see the trend in the coming years say a year, 2 years, 5 years? What are the kind of trends you see, at least in the SM REIT space?
See, firstly, India loves real estate.
Yeah.
Apart from gold, India loves real estate.
Right.
In fact, if you look at any average Indian's savings portfolio,
Yeah.
real estate will be 50%.
It's always been real estate, gold. These two asset classes have always been
Yeah.
the two assets that everybody has to have.
Yes.
Uh,
So, as for real estate, typically my even when I started off, also my major exposure was real estate. So, typically 40 to 60% of my wealth exposure will be real estate in a typical Indian investors, retail investors portfolio. There was always a problem of access and exit. These were the two major problems that were plaguing him, that were always at the back of the mind, but that never stopped him in him or her into investing into real estate. Now with these kinds of platforms coming in, the access to quality supply, the quality grade A assets has increased much more, and the hassle of management, which was always my problem, is out of question, and being listed in a public uh, exchange always gives me that liquidity. So it's a no-brainer that it has to go up. In fact, if you see, as per an estimate, in the next 2 years, the available supply for which can go to SM REITs will be more than 300 million square feet. Right?
Okay.
Almost 50 to 60 billion dollars USD is available if you want to make it go to SM REITs. That's the kind of supply, quality supply that is available.
Okay.
And as far as the demand is concerned, there are three factors: supply, demand, and then the person who is orchestrating these two. These three are aligned, then it is gonna go up.
Right.
Supply is there.
But all of this will come to SM REITs, or will it go to REITs or
that
alternative
is so.
investments?
That is the next part, which is the demand space,
Right.
demand side.
Yeah.
See that the demand is empirically in the last few years we've seen the demand growing both in the listed markets.
Yeah.
Second, in general listed spaces in general, regulated and regulated. Then alternative spaces specifically, alternative investments. And FOP, fractional ownership platforms also in particular, we have seen demand has been consistently increasing. Right. In fact, the number of HNIs, UHNIs as a share of our overall households, HNI and UHNI households, it is expected to triple in the next 10 years.
Oh.
Right. The share of them participating in this is gonna grow up. The demand is so huge, and if you do the basics right, it is not going to come down. We'll look at the global trends also, how it evolved.
Yeah.
And the third one is the one who is connecting these two dots, because the supply is required, and the developer also, especially the mid-sized developers, they always cast out, they want more fund to keep rotation. So this gives a beautiful platform. And the regulator is very forthcoming. They understand, they are open to feedback, they are constantly evolving this thing. Right? Which means that it's a good, perfect product, I would say. The same thing happened globally also. So let us say we have to see the SM REITs is a concept only for India, nowhere else is there. It's a perfect Indian product, first time in the world. As far as REITs as a concept is concerned, globally it's almost a $2 trillion market cap. Right? US alone has close to 1.2, 1.3 trillion dollars in REITs. It peaked up to 1.7 trillion in 2021 or so. And in fact, there, interestingly, can you guess which is the highest asset class within REITs? They have multiple segments within REITs.
Right.
Public storage REITs or medical office REITs, etc. Can you guess which is the highest one? It's not office, it's residential.
Residential. Oh, wow.
Resi is 40% of their overall REITs. So they have a concept of multifamily.
Okay.
Right.
That concept of residential REITs I've not heard in India yet. It's mainly commercial real estate REITs that are coming out.
See, basically, Resi also, it's managed residences, right? You instead of renting out the individual house, they take the entire multifamily house and the entire apartment complex is rented, and it changes hands. Right. That is how it's managed.
So at least coming back to India for now, what are the kind of returns that you expect or the growth that you expect in SM REIT when you compare it with other alternative investments? As you said that there's a huge pool, a huge supply, demand, and a facilitator which will make it happen. If everything falls right into place, then it's a good future for all the kind of investments today, be it AIFs, SM REITs, REITs.
So we expect it to double every year.
Okay.
For the next few years. Why? Because it is starting from fractional ownership concept.
Right.
Fractional ownership has been growing
Right.
healthily,
Right.
but fractional ownership had its limitations. A lot of wealth managers, a lot of institutional capital never came into fractional ownership because
Right.
they wanted a regulated product.
Right.
Now with this, it opens up all these larger relationships for each of these investment managers. So that capital starts coming in.
Almost double-digit growth. So you can say in the next 5 years, you can almost double.
Easily.
Given a 15% CAGR,
Easily.
5 years is enough for a 15% CAGR for the industry,
Yes,
the space to
yes.
double. So that's the kind of growth coming in. So that can be a very lucrative pitch for many of these institutional guys as well. That is a space to look out for
Yes.
in the coming years. But when you mentioned about the US and globally the REIT market being around $2 trillion, REIT as a concept has been in the world for a very long time. And developed nations were, and specifically US, was one of the pioneers in all of this. While in India, 2014, around 10 years back, I think so, it got introduced in a good way. But
The first REIT came in 5 years back.
yeah, but the listing happened very late. It took time to take it off. So, as a concept, REIT, while worldwide in developed countries, it has been something which is a proven, tested, and proven concept. In India, it's still finding its ground as I speak. So, what are the trends globally in India you see for REITs, SM REITs happening? The kind of people being accepting the concept of this today, being forthcoming to invest in this product, because REITs has been successful globally. In India, we've seen 5 listed REITs now. So you can say good amount of success has come to it. But in what way will you say is it completely successful? Any further
See,
things?
basically, US is a pioneer. It started almost 60s.
Yeah.
But the other markets, even especially Europe and the Pacific, all these opened up only in the recent past 10 years also.
Right.
So even China opened in 5 years back or 4 years
Right.
back. So REITs as a concept, the securitization as a concept
Hmm.
has started coming in slowly. That is one.
Right.
But I think it is picked off in a big way because in Indian REITs, almost 30% participation is from retail investors, right? That's a good sign that people are there to embrace this. And our love for real estate, because it stands the test of inflation. It's not going to die down anytime soon. What is going to happen is only recently, as I've told earlier, the kind of proliferation into different asset classes. We haven't heard of 7-8 years back, we haven't heard of warehouses becoming a mainstream investment option, right? We haven't heard of office spaces from a retail investor or vacation homes people are buying in and all these things.
Yeah.
These of them, thematic SM REITs will start opening up coming soon. Right? That opens up the market.
Okay.
Right. As of now, our problem in India is everyone is going after the grade A spaces, whereas the developed nations, they even a grade B assets also. For example, in some of the listing platforms, you can see a car washing showroom getting listed, tokenized, and then crowd funded.
Oh, wow.
Can you imagine it in India now? No, it takes a little more time. The moment you go one level below, you are concerned about the due diligence and all these aspects that is going to come in.
The risk which gets associated with it.
That is going to take time. So the industry is only getting standardized now. The RERA is the strongest law that came only 8 years back.
Yeah, and it's still as we speak, every day, every month, it's still getting fine-tuned. And
so the day you are able to confidently go 1 or 2 levels below and still have same amount of confidence, you can securitize that asset also. It is all about your confidence on the asset.
So while confidence on asset is one thing, even geographically, India is so diverse, and mainly all these investments, be it REITs, SM REITs, alternative investment funds, they are targeting tier 1 cities today, and mainly the metropolitan cities, be it the MMR, NCR, Bangalore, Chennai, Hyderabad, Pune, the top 5, 6, or maybe top 10 cities, if I have to go to Ahmedabad and other top cities, 10 cities population wise, where the major workforce, organized workforce, MNCs are set up. Where do you see, when you say 1 or 2 level down asset wise, do you see this also going into tier 2, tier 3 cities, wherein now you have a lot of retail activity happening, malls opening up in organized spaces, you have listed retail players opening up malls in these cities, 5-star hotels going in such places. As you rightly said, logistics and infrastructure development has been so good enough in India over the last 10 years. In any economy, once a good infrastructure development is done, the years ahead always look very rosy, because the kind of time taken to travel or any other things, it reduces. The cost also reduces. So you have a lot of logistics and multimodal hubs coming in across tier 2 and tier 3 cities in India. So given all of that, where a government push has come in, many other players are entering these cities. Do you see SM REITs or REITs also being more gung-ho about these tier 2, tier 3, tier 4 cities of India?
In fact, SM REITs is going to be the vehicle which is opening up, which will open up these spaces.
Okay.
See, basically, what happens is for these kinds of fractional investments, what you typically do is you look at the first thing is you look at the asset, then the tenant,
Yeah.
returns,
Yeah.
location, and who is managing. These are the 5
Right.
factors I typically do. Is
Right.
slowly REITs, even InvITs also infrastructure REIT is
Right.
like an infrastructure REIT. So
Yeah.
all of them, what they've tried to tell the investor is, don't bother about the location.
Yeah.
As far as you have all the fundamentals, all right. I'm managing it. It's fine. Slowly, that education has already started.
Right.
But these guys may not have the access to go to tier 2 or a tier 3 city to go down. But whereas SM REITs, the investment manager can be from a Coimbatore, can be from an Akola,
Right.
and then they can look at the local markets
Yeah.
and then see that this is a rateable asset. Why can't I go it? This is a
Right.
school which has a legacy,
Yeah.
which will not go out in the next 20 years, but it has a lot of asset locked in the building.
Yeah.
Can I liquidate it?
Yeah.
All these opportunities can only happen because of the local players
Right.
who understand this.
Yeah.
And this education has already started. Investors started understanding these things. Right? They will look at stickiness, they will look at the expectability.
Right. So investors will be very forthcoming in investing, but do you see these platforms or these players, SM REITs, REIT players actually going and investing in these assets?
100% जाएंगे because beyond a point there is a
Yeah.
beyond a point people want to start innovating in this also.
Right.
If the first street and the 51st street all only talk about office space in Bangalore,
Yeah.
office space is this thing, how do I differentiate? How do I give a
Right.
better quality
Right.
asset?
So India of 2030 is also a story which is
Yeah.
coming up. India becoming a $5 trillion
$5
economy.
trillion.
So sorry, $5 trillion economy is coming up. So say around 2030, do you expect a proliferation would have happened already in these cities and other asset classes within SM REIT, say thematic funds that you spoke about? Do you think a faster growth is possible by 2030 at least?
And see, basically, all these are all a trend going towards it. This is not just happening in real estate. This is not just happening in REITs, in which I've told about. And there is a push for the bond market also. There is an online bond platform released by, which is being brought up by SEBI. So the securitization of an underlying asset or public access to the private alternative investment funds is becoming the main theme. The moment it becomes mainstream, it is gonna open up and actually throw a challenge to the large established things also. So there will be good amount of equity in SM REITs along with the main REITs.
Right.
In fact, to the tune that they can also start competing with them.
Right.
I wish that for that future. Yeah.
No, of course. That will mean that we as a country are going up, and any parameter or any definition of a developed country is also that almost all concepts are tried, tested, and successful. So yes. Coming to the benefits of SM REIT, so we can say two sets of people: the demand supply. The supply comes from developers or the asset owners, and the demand comes from the individual investors. So if you can give us some kind of a brief, what are the benefits for developers and the asset owners? And as a second question, what are the benefits for the individual investors, the kind of returns each of these people can expect, or the kind of monetization or any other benefits which accrue to both these sets of people?
Understood. So if you look at the asset owner or a developer's perspective, so this is a whole new channel that has opened up for him to unlock his value or liquidate his assets, or else churn good amount of activity for himself. So it's just that you need to be more quality conscious, or you need to make sure the asset is presentable to the market. Once those basic checks are done, there is someone who is ready to grab this asset, put it out into the market, right? And the amount of with SEBI going proactively standardizing all these things, there is not too much of a hassle if your basics are right.
Right.
So which opens up a new funding channel for these guys also, right? That's a fantastic thing. Unlocking wealth, not just developers or these guys, even some of these businesses. For example, you will be seeing a lot of businesses who will be holding a traditional their legacy asset and then which is their headquarters. But their book value might be 50 crores. But if you actually put it to the market, it can be 500 crores. The book value never changed.
Right.
No one proactively tried to even liquidate it. What happens is that 500 crore has a multiplier effect in your business. You can lease it back also if required. Right. This is a good unlocking channel for you as far as this is concerned. With no related party rule, what it also brings is, because there is always this thing, मैं करना है नहीं करना, should I do it or should I ask someone to do it? You have to let a professional guy do it. Your job is only to get it. So very simple. You know, black and white, this is what it is.
Yeah.
And you will have a comparable metrics also. Sometimes real estate may price discovery is also a problem. Should I sell it at 100 crores? Should I sell it at 110?
There are many valuation models out there.
Exactly.
DCF,
cost plus hoga, or else comparables hoga, rent multiplier hoga, you name it.
Many.
Or sometimes need basis. Everything is, I want it immediate liquidity, then he is gonna discount it by 30%. Should I do it or not do it? Here I can plan. Second, I know how much time does it take to take it to the market, and also what is a market benchmark return expectations.
Okay.
So you know this is my price. This is an option. If I get a better offer, that's a different thing. But this is always an option for me. Right. That's how I say it's a fantastic channel for them. As far as investors are concerned, I think we've already talked about the benefits of real estate. Fundamentally, this is one thing where you get an interesting thing is basically if you see the organized sector among the senior citizens, at least 30% of them are dependent on some form of a pension. Right? They are having a alternative stream as a requirement for their livelihood. Right? If I take the same thing, some of them who are looking for an alternative investment, alternative income stream on a regular basis, this is a good thing. It gives liquidity. And the other benefit is my income is increasing. It basically, if typical commercial real estate, you will have 4 to 5% increments in revenue rentals, right? That means you are basically covered for real inflation. You are hedging against inflation. Your income is stable, and you can understand your income. And the second thing is this. Let us say your rental is increasing by 4 to 5%. That means there is an inbuilt capital appreciation component also built in, and it gets treated accordingly. Liquidity, periodic income, inflation hedging, and more importantly, safe and transparency. Professional managers managing it. All these things make sure. Why should I hold to my 5-6 houses? Rather, I liquidate a couple of them, get it here. I'm still holding real estate.
Right. So basically, parking your money with a good fund, and then forgetting about it for some period of time, because you have that faith in that SM REIT, the platform, the investment manager, that money is taken good care of, due diligence is done, asset is clean, investments are good, returns are good at the end of the day.
And you need not leave it to hope.
Right.
Because there are checks and balances there. So if there is 1 crore income and you're distributing 85 lakhs, then the trustees first come to you and say that why did you not distribute at least 95 lakhs? Because this is the rule. If you do it consistently, then you're asked to go out by SEBI. Right? There is a watchdog, and there is an umpire who is looking at you continuously, monitoring you continuously. It's not just hope. You are neatly regulated product.
Understood. So I think so we've covered a very good whole A to Z of SM REIT, if not everything, but a very good analysis. In conclusion, maybe if you can suggest what are the few tick marks that as an investor we should look in a SM REIT platform, SM REIT fund for that matter. What are the few things that an investor should look out before parking their money, be it 10 lakhs or whatever money it is? Because at the end of the day, each penny is worth it. 100%. It's a hard-earned money. And at the end of the day, as Indians, we want कि कितना पैसा छूट रहा है, कितना पैसा कमा रहे हो. And then whatever asset class it can be, SM REIT, stock market, your normal real estate, normal commercial real estate, your gold, anything. How much money I'm getting and the risk involved in that. These are the two things that as an investor, anybody will look at. So what are the few things, if you can say in concluding remarks, what are the few things you can look for, and anything else you would like for our audiences to know?
See, basically, the first thing is fractional ownership or SM REITs as a concept is you can look at the asset in particular. You can analyze and take a bet on it, right?
Right.
Which means the first and foremost thing I want to look at is the asset quality. What is the asset? And then yes, there a lot of disclosures will be there in the filings also. Who is the tenant and why is it important, etc. You can apply your own brain to understand, is this asset fetching me enough rental compared to the market, and then typically, the rentals are all yields are all standard between 7 to 8% kind of
Right.
yields. So that means you can expect these kinds of yields.
Mm.
The softer aspects to it, and more importantly, who is running the show? Is it a reputed manager, or is the team behind it? Is it doing good?
Right.
Is the tenant good? And also, it's always makes sense to go through the filing papers once. It's always better to go through rather than just leaving it to the advisor. If there is anything specific that you want to know, some of the the good part is the money should not be withheld beyond three months. That means every quarter they should be out. If someone can do a monthly thing also, that's fine, but quarterly, that means you can expect your cash flow and also come accordingly. Any other things like what is the fees that they are going to take and all these other things also you can take it.
Okay.
Primarily asset, people running the show,
Yeah.
and the return. These are the three major things.
Major thing. Okay.
Yeah.
And this can be studied through maybe the research reports that the SM REITs publish themselves,
Yeah,
from the market information online.
the scheme also, the good thing is when they release the scheme, they give all this information for you
Right.
to consume
Right.
and then understand the micro market, understand the asset type, understand the tenant,
Right.
and then why this asset is good.
And at the end of the day, it's a regulated space.
Yes.
SEBI regulates it. So because if you received a license to operate, I'm assuming even SEBI or these other regulatory bodies might have done some check on the players, on the platforms, so that you can also approach
Yeah,
the
one,
investors.
this is the license. So basically the license also, they made sure the net worth, minimum net worth is 20 crores of an investor, anyone and everyone. And you should have an experience in real estate.
Right.
You should have private limited company. You should not be related to any scheme that you want to get into this. All these things are taken care of, and you should have directors, out of which at least half of them are independent, not in the company.
So I think so. SEBI being a regulator makes life easy for both investors and the platform holders. As a platform, you guys can go out and market your products, saying that okay, we are regulated by SEBI, so that's a good enough confidence for a investor to invest in. So that's good enough, good insights. Anything else you would like our audiences to know, or any pitch you want to give for SM REITs? But it's been good insights, good knowledge.
See, as Assetmonk, we are excited about this space. Our hundreds of investors who have invested through us also are eagerly waiting. We are in the process of preparing the documents, etc., and maybe applying for a license very, very soon, and then hope to come out with early next year, the first issue.
So really look forward to you guys revolutionizing the Indian real estate space. You guys, other fractional ownership owners, other SM REITs. I mean, the whole ecosystem is getting developed in India, and India of 2030, India of 2050 should look much different than what it was 100 years back. We are in line to become the largest or the second largest economy in the world, and hopefully with all of this coming together, real estate will always play a huge part in the GDP of the country. So it's been a good session. Nice to have you here.
Thank you. My pleasure.